What's up, everyone? How's your Thursday morning? All right. Let's see. We're live. We are live. Nice. What's up? All right. Give me a sec. Let's let everybody get here, and we'll start the show. All right. So I'm gonna be off for the next 2 weeks after this week. So I hope this limited series helped you somewhat. Last time we were last in February, the series we did, we discussed a lot of stuff, trading the trend, and obviously we're making killing trading gold. This time it's not as easy. Summertime, the volatility is different beast, different market. We talk more about the psychology and what it takes to be a successful trader. I'll be back in 2 weeks. After that, we'll see if we resume the content, at what point, and we'll do some other series on some particular subject matter. Okay, so since it's summertime, a lot of traders are off. We are not bringing too many interviewees just yet. We're saving them up for the fall when the activity picks up a little bit, and we'll make it more interactive. But for now, let's talk and dive into what happened yesterday with gold, with all the trades. We took 2 trades yesterday on gold. The obvious one was, 1 second. It's actually coming into a nice zone. Might be a buyer soon. So yesterday the Trump news came out that he's gonna shit can Powell. Essentially, he's exploring options. So that means the interest rates will be. That means that the Trump will appoint somebody who is a yes man, who will do Trump's bidding, meaning he will cut interest rates to 0. And thus gold and all the dollar pairs reflected that. Dollar went to shit, obviously, because it's going to now yield less. And 1 sec, let me just, there we go. Yeah. So now the yield on the US dollar denominated debt will be less. So less money will be coming into the United States, yada yada yada. The rate differential effect will be dollar negative. Okay, so you obviously had this spike, immediate spike. Then the news comes out and says, no, this is all bullshit. We're not doing that. And then you got this. So all I did, I traded long euro, traded long NAS. I just closed it this AM actually. But the big one was the gold one. So I literally just left an order here at 32, at 42. Let me, so 1 sec. So here's the, here's our Telegram group. So this was at 11 a.m. But leave the limit because why? Well, because I didn't want to chase this market, right? So you don't know what, since it was just news and it's literally algos reacting, you don't know which way it's going to go. But I figured if we're going to get a pump and the news is legitimate, we're still going to have profit taking, which we did, and then into some previous area of interest. What was the area of interest? Obviously just previous high, which now turned resistance, right? Sorry, previous resistance now turns support. So I simply left an order at 42. This was the trade. I took half off at 52. At 52 and change. It went a little higher. I thought maybe we're gonna get a runner. We didn't. So the second half got stopped out at break even. So again, I had 2 trades that I took partials on. Both made money. So what? This way you can see, you know, you can all wait, showing the different screens. My bad. So this was the pump. This was the retest at 42. I left an order. It went up. Closed it at 50. Half at 50. I thought maybe if we're gonna get a runner, we did a retest and continuation. We didn't get a continuation. So what? So I still made money, and this is why I like to take half off when there's already it moved away from the obviously from the entry point, and I put it in immediate stops to break even, because even if what the hell is the point of not doing that and then letting the stop loss hit all the time? So at least I make partials, even when I'm not 100% right? I still make money because I can protect the trade. I catch a little bit of a pullback or a little bit of a move. It still makes money. It still is profitable. So it's better to take some money off the table, put it at break even. So I like to de-risk the trades immediately, because the longer you stay in the market, the more ways you're gonna get fucked. Okay? Very simple, honest truth. So the less you are participating, the less likely you're gonna get stooped. Okay? And if you don't, not in a good way stooped. Okay? So this is why I like to de-risk my trades very, very quickly, because I want to be in them. I want to de-risk them and move the fuck on. Because if they don't work out, they don't work out. I don't give a shit. I didn't lose anything. I made money. I didn't lose anything, and I can move on. My head, my mental bandwidth is not occupied. Oh shit, it's now going against me. Oh, it used to be a winner, now it's a loser. No. I don't want to be in that situation. I need my mental bandwidth to be focusing completely on finding new opportunities, not fucking just, you know, babysitting shit and be worried. Because once the trade is risk free, and I satisfied my greed, right, by taking something off the table, now I can proceed with finding new opportunities, and that's all I'm doing. Okay, so I'm gonna remove this. I'm gonna clean the chart up. Also, importance of keeping clean charts. You know, once in a while, you can just remove all the bullshit from the charts and do everything in you. But for now, we still have everything relevant right now. So anyway, so this is gold. I'm gonna make it brighter for the. There we go. Make it brighter for the video. There we go. All right. Yeah, 100%. All right, cool. So again, the fibs, are they working? Well, we need to refib this now. Okay. So are they working? 618 reaction, 38.2 reaction, right? So 702 right now, trying to react. This is the daily ATR, and this is going to be the retest area as well. So can you go along here? Maybe. But it's definitely producing a reaction, so the algos are watching this level, right? And the institutional players. And you have a small reversal sign. But I'm not convinced that this is it yet. I personally would just wait for the daily exhaustion point, which is around 3,300 even number. I would put a buy order at 302 and just leave it at that with the stop loss somewhere below here. I think very likely we're gonna do a very conservative approach. We can go along either now with the stop loss here, all right, or you can get more conservative with your entry, and the likelihood of it hitting is less, the probability of it hitting, but it's a better trade, higher probability trade if it hits, if you know what I mean, okay, if you understand what I'm saying. So I would want to see another candle down into the zone. Then what? Then the reversal candle with the top being taken out. Our stop loss goes here, and we ride it up at least 2-3 fibs up. Okay, with the break even after you reach 30-40% of the movement, 40% of the movement you achieve in the price action. You can take a little bit off, put your stop loss at break even. Oh, I'm sorry, at break even right here, and that's it. And now it's a risk-free trade. If it runs, it runs. If it doesn't run, it doesn't run. Who cares? Okay, so this way, if you're trading big levels, you don't even need to fucking know what the trend is. You just trade big levels. Big levels always produce reactions. You capture those reactions, you make money. That's it. And that's when you're against, when it's a choppy flow. But like it was in February, March, April series, the shit was just running. Okay? You would be making 20, 30 points every day like this. So again, different market cycles. That's why you need to test your system, how it performs in different market cycles. Because my system will perform very well on a trending market and okay during choppy market, okay? Because I pick very big levels, very conservative entries. So either way, I'm going to be making money, all right? It just depends how much money. But the rule number one of trading is what? Never lose money. And the rule number two is, see rule number one, okay? So that's what trading is all about. There's no... that's it. All right. Also, it's important to look at correlated markets. So you can see that silver is actually staying bid relatively well compared to gold. Right? Gold has petered out a month ago and has been just this anemic, trendless chapfest. 1 second. Chapfest type of price action. As you can see, this was the easy money, and this is the consolidation. 1 sec. This was the easy money. This is the consolidation phase. Okay, but even in the consolidation phase, you can make money. This was the easy one. This is when we did the February, March, April series. Whenever they were, you can rewatch them live, and you were just buying dips and and taking profits. Okay, this was the easy money. Every market goes through cycles. It goes through a trend cycle, it goes through the consolidation, and then it either continues the trend or reverses. That's it. That's the whole trading. Then it does another consolidation, it either reverses or continues. That's all you got to do. You have to understand the market cycles, how it moves, when they switch to what environment, and make sure that your system will survive every market cycle. Okay? Because if you're just going to be if you're going to be blindly just doing trend trading in a consolidation market, you're not going to be, you're not using your discretion correctly. You are just you're doing stupid shit at the wrong time. You're doing rather something that works half the time in a wrong environment. Okay, it works half the time in the right environment, and you're using wrong tool for the job. Let's put it that way. So when you have consolidating markets, what's the point of trading it like it's a trend market? There is no point. So how do you trade a trend? Simple. The trend is there. You buy the dip, and that's it. It's very easy. Well, how do you trade the consolidation? Well, you trade either extremes. This is a daily, obviously, so you're not going to be waiting for big levels, because it'll take days for it to get to one of those major support levels. So you hop off on the 4-hour, 1 hour time frame, and look how reaction is being produced from 702. Right? Still, it's already climbing. And you find proper big levels to do the same thing. Okay? But you do have these equal lows, so it would be nice for the stop losses to be popped from these equal lows. Then we buy on this candle right here. Okay, the trade choppy market is at extreme levels. This is at the bottom here. You want to buy bottom, you want to sell the top. That's it. There's no magic formula. It's a sideways, mostly sideways market. It's very choppy. It's not easy. It's this going on. So what you gotta do is to increase your probability is to trade at extreme levels. So that's why I'm here. Fearful, whatever you want to call it, both of them are safe. Safe in the hard market is important than you entering trades. Okay, you need to be entering safe trades in a less than desirable market. When gold is not when it's doing this one day, then this one day, then that, this, that. It's not as predictable as these. So just boom, 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 boom. You know what I mean, right? Look at this, just right. So because the 3,000, you just you have to be more cautious and identify better levels to enter. And look how beautiful diagram would be for before we have open in 30 minutes. 1 sec. Let's see. Okay, Stan, what do you think about the Trump policy? Do you think he'll get fired soon, or how it would affect the markets? Well, that's what the markets are trying to find. Nobody knows if he's going to fire him or not, because the owners of Federal Reserve, which is not a federal institution, meaning it's not a government institution. It's owned by the banks. It's a private corporation that is owned by the banks, who has ability to print U.S. dollars, which is a fucking ridiculous notion in itself. You read up on how it was formed. It was passed in 1913, last minute on Christmas, when all the senators and everybody were at the government, and all the bullshit that comes along with it, and how many central banks were attempted, and how many presidents were assassinated. For them. There's a whole fucking rabbit hole you can go into about central banks. But so Trump really, Trump is not in a position to call shots with the Fed. Fed is the one. Fed is the real. Bankers are the ones who rule the world. Okay, because they got all the money. They can buy and sell fucking politicians. Look at the Epstein files right now. A little tangent. How many senators and congressmen voted not to release shit? You know immediately these motherfuckers are compromised. Right? Why the fuck would they won't? Why the fuck wouldn't they vote to release it then? You know what I mean? So immediately you see who's compromised or not. So everything is bought and paid for in Europe, in the United States. It's been like that forever. Blah 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 blah. Everybody knows. Okay. So with Trump removing Powell, if they make some kind of under the table deal between the Fed and the president of the United States, to put somebody, a yes man in power, maybe that can that can work. But like again, that was the whole thing yesterday. The first they said yes, the Trump is definitely removing him, and then Trump comes out, 20 whatever an hour later says no, I'm not. I'm exploring options, but I'm not doing it because I don't know how to fuck if he can't even do it. And so you have a lot of FUD, you have a lot of fucking news hitting the wires that just gyrate the market one way or another, which is good. It gives you volatility. It's bad for you if you were short and you got stopped out. Yeah, it sucks. That's why what? That's why it's important not to be in the market all the fucking time. It's important to be in and out, in and out, in and out, in and out. And the shorter your stay is, it's like the game of musical chairs. If you secure your chair, just you'll be okay. Just don't overstay your welcome. People who are constantly doing 15 trades a day, 100 trades a day, they just risk to be caught up in one of these fucking noises instead of me waiting for a noise to occur, then react to it and make money. Okay? That's it. It's a nice 10-point rise right there in gold. Nothing to sneeze at. 702. Even the whole fucking 702. If you guys learned at least that. Wait. Okay, I don't know what was going on with the leg. Thanks for letting me know. I don't know what's going on with the leg, but hopefully it's not. It's okay now. Seems that way. Anyway, so your job is to react to volatility and capture some of that volatility as a trader. 702. If you only learned one fucking thing in the last 2 weeks, the 618 786 sweet spot where you can catch the reactions and do the trading that way, that's already $1 million formula for you, because that's exactly how you can make $1 million trading this. Okay. All right. S&P, NAS rolling over prior to open. We got 9 minutes to. Prior to open. Okay, this is yesterday's highs. Okay, I think it's yesterday's highs, right? Yeah. So we couldn't close above it. We're rolling over. Again, no walk in the park with the and same crazy volatility with these stocks as well. So no walk in the park. With stock market, I think it's correcting lower for now. So again, what's the level to sell? Okay, it's the level to sell US 30. Right? We're at 618. We tapped 600 and now run on it. Ideally, you would want to capture if you want to short this area right here. So this is where it was the peak. Right? This leg up, boom, boom, 440. Okay. Again, breakout, retest, continuation. Breakout, retest, continuation. Breakout or breakdown, interchangeable. Right? So, I get a little bit more opportunity. This one, the pullback, I get close to short. So now I get more profit. Okay? And I get less trades, but I take more quality trades. I try short here, okay? Fine. What you're doing, okay? I just wait for particular moments, my spot in the market, and that's it. I don't do anything else. I don't need to attain, will the price here or here right now? I don't give a shit where it's going to go. I want to hear something else. I don't care. In the middle, I think this is what's doing. So this is what I've been doing 12 hours. More, all right, almost 24 hours. So, that's what just can. So the markets need a little catalyst to push it one way or another. And catalyst, the news, the spike, and spike. So there's efficient entry markets future price images that have discounted information and have to thus the price will reflect the new information in the new information in the price. Okay, so this. When price everybody is nothing new to the equation, so just minus plus, blah blah blah. Right? This is how the price acts during that time. Because why are you overpay for a car by let's say an average selling car, whatever, $100,000 Mercedes. Some people sell it for 110, some people sell it for 90. Equilibrium price is about 100K, right? I'm just saying for a used car. So same thing here. Some people overpay a little bit, some people overall the price is at equilibrium. Until they say, okay, the Mercedes won't build anymore, and that means the Mercedes will be in the market. The price of Mercedes will sell the $100,000, not $200,000 Mercedes. Right, supply and demand. Yes. So action will be needed by action that be reflected, the news reflected in the price. So same thing here in the market. Okay, equilibrium. Nothing is pushing. Nothing monitoring that. Okay, to enter now. So live feed it says that. Jesus Christ. What opinion? Yeah. Sometimes it happens, guys. Not that I don't see, and I think this is where it's going. So ideally, this I don't really need to do anything else. I didn't do anything else. Was it? I forgot it. When Tuesday, Wednesday, one started. When I got this, I think it's where. Still. A sec. So it's where. Didn't exist. We saw we saw the ground here. Stops, puts here. Trade again, break the bounce. It's just same thing. So now again, I don't really care what happens in the next until it gets here. Where I'm gonna go what you want to. Okay? I see from phone. This is how you trade from the phone. You trade from the phone after you do analysis on your computer. You identify major levels and you use to trade on your phone. If your phone is bigger without having a map right on a screen, then you're probably just more likely not gambling. Okay, so. Your job is to identify. Then yes, if you want, you can. You're in the gym, you're at the walk, you're in the restaurant, you get alert. Okay, this is at my level. Then you look at your phone. Okay, the candlestick, whatever the price action is dictating me that there's a question and turn move is coming. Okay, I jump on it to turn around, and then what happens, right? But use that probability for you because you're right level. You have all the signs of what it needs to look like for a trade to work out. And that's when you press the button on the phone to execute it, okay, if you're not next to a computer. This all gives you a tremendous freedom of things you can do during the day. You know, you don't need to. You do your morning analysis the night before, or now, or earlier. Obviously, much earlier than that. But you do it, and then you just wait. And once it gets to your, what's the point of you sitting? Market just opened. Market just opened. What's the point of you? Imagine you're a hunter. You're sitting here, in bushes, and all you're doing is shooting bullets randomly in the air, instead of waiting for the animal to pass through, and then that's when you shoot it, right? This is what most of you are doing. You're shooting fucking just into the woods, hoping to hit something, right? That's all you're doing. Instead of waiting for the target and then hitting the target, right? So don't be an idiot. Wait for your, I don't want to say prey, but right? Wait for the price to get to your level, then you knock it down. That's it. That's all you got to do. If the price action is confirming that that is exactly what's happening, right? So that's it. That's pretty much what trading is about. 1 second. Let's see. Okay, so let's slow. Okay, S&P. Chop. There we go. Pump a little. Again, it's looking a lot of shit is happening here on a daily. This is why it's important to zoom out. Do you see just you have this is like that, right? No house, and we couldn't break out. Lows, and then I came in, and now we're in this doji, and it's no what fucking. The professionals don't know what the fuck is going on. Then you and you should take the fuck out. Does it mean that but I'm trading today? I need to do nothing. No, you don't. You wait for that move. As I'm friend, you get it. And that move is just there's no cash people on so yeah, no interest. Basically, here. You know the topic. It's not here. They can't really sell. And so you watch. There's a direction driven by fundamental catalysts. Fundamental catalysts. It's important to combine fundamentals with technicals. That's when you actually have the best trading opportunities. They merge together when both of them confirm this action, right? That's when you get proper move. That's when you can money. Everything is just YouTube. It's just a choppy. So. Keep rocking strong gets his way. Explain it to your listeners. That deflate is going to forever going to go up, right? So if it kind of boom happens, you'll just sell is going to go up. It ups probability again. Who knows for probability? This ups give it clues about what I mean. Buying up here. Okay. All right. Which sucks. Choppy too. Wow. All right, this is what I'm doing. Gapping, we're going to be a little choppy. I don't know what it is. So now, people here again, just like I did on Twitter yesterday. What to do. So watch the feed, watch this, or watch the Telegram after 7 days. All right. Yeah, it's just not the truth. I don't know. All right, guys. I'll catch you on last episode and for this limited run series. So take it while they last. You get something from something. If it's useful to you, use it, etc. Right? So, all right. Yeah, I know what's going on with the stream today. So, I'll catch you all tomorrow. Go from there. Cheerios.